Yes.
So we are doing October-November 2023, paper 21, question number 5. And it is related to limited companies. Fatima, can you please read the sum for me, please?
Okay. B Limited provides cleaning services to client offices and factories. The clients provide their own cleaning materials. The trial balance of B Limited at 30th June was as follows.
Okay, so this is a trial balance. Before I do any markings, I will go and see what do they want from me. They want from me one income statement and one statement of changes in equity. Okay, no problem. Now I'm reading the sum. Yeah. When we read the sum, what is the most important thing that we have to do?
Markings.
Yes.
Without markings, you cannot proceed on to anything.
Yeah.
Okay. Now, if you see over here, B Limited is providing what?
Cleaning services.
If they are providing cleaning services, that means this is a business of just providing services. Do you agree with me?
Yeah.
If they are providing services, that means they only have revenue, less expenses. Because they are providing services. They don't buy anything, they don't sell anything. There is no buying and selling. Since there is no buying and selling, there will not be any cost of sales. Are you with me, Mahat?
Yes, miss.
Like the way I provide services to you all, we don't buy and sell goods, correct?
Yeah.
Yes.
There is no buying and selling, so there will never be any cost of goods sold. Are you with me?
Yes.
So now what are we supposed to do? We are supposed to prepare income statement and statement of changes in equity. First thing that is most important is the marking. So we'll proceed with the marking. One person will read and tell me the markings. Fatima, start.
Revenue is in the income statement and in additional information.
That we'll talk later.
Okay.
Had.
Wages and salaries, other expenses.
Motor expenses, other expenses.
Okay.
Insurance, other expenses.
Okay.
General expenses, other expenses.
Okay.
Motor vehicle cost. At cost is depreciation of motor vehicle.
This comes as a non-current asset. Okay, so it will come in the statement of financial position. Currently, you don't have to do anything with it. Correct? Because we have to prepare only income statement and SOCE. So I'm not worrying about anything else. Are you with me?
Yes.
Same thing will go for equipments. Yeah?
Yeah.
Okay, come on. Go ahead.
Also for trade receivables, it's only in SOFP.
So this is current assets. Current assets.
Yeah.
And all this is given over here. Where will this go?
In the statement of changes in equity.
So ordinary share capital, general reserves, and retained earnings. This will go in SOCE.
What
But
about the dividend?
this is dividend paid, right? This will
So
also
is this
be statement of changes in equity.
yeah.
Okay? Are you with me?
Yes.
Fatima, read the first adjustment.
Revenue of 9240 was received in advance.
So,
Prepaid.
add or minus?
Minus.
Okay?
Miss, but what's the reason for subtracting?
Advance, pre-received income.
Isn't this pre-received expense?
Income received in
Yeah,
advance.
yeah.
Anything pre-received has to be subtracted. Anything outstanding or accrued has to be added. This is the general rule.
Okay, I was.
Okay? Yeah. Read the next one, Mahat.
The insurance charge for 12 months to 31st December 22 was $7,200, and for the 12 months to 31st December 2023, it is $7,440. On 1st Jan 2023, insurance was paid in full for the 12 months to 31st December 2023.
Okay. So there's so much of information. What do? I don't know whether it is outstanding or whether it is prepaid or nothing. So what do? I will make an insurance account. Which account will I make?
Insurance
Insurance is what account? It is an
expense account.
expense account. If insurance is an expense account, okay, so that means I will do OPOP IB, POPO B. Yes.
Yeah, yes.
What will I do? POPO
Popo
B.
B.
That means prepaid, outstanding, prepaid, outstanding. Bank is what you've paid during the year, and I would be income statement. What goes in the income statement? And I am only interested in this part because I have to make the income statement. Are you with me?
Yes.
Yes.
Now let's talk about at the beginning of the year. Insurance charge for 12 months 2022 was 7,200. My year ends when?
30th June
30th
2020.
June. When does my year end?
30th June.
30th June. That means whatever 7,200 I am paying is for the full year, 12 months. Yeah?
Yes.
At the beginning of the year, I had something which was there, prepaid or outstanding. Think it was prepaid, right?
Yeah. Prepaid.
For 12 months was prepaid. 7,200 was prepaid at the beginning of the year. So that means from July to December, 6 months money was prepaid into 6. So this is prepaid at the beginning of the year. Can you tell me the prepaid at the beginning of the year is how much?
Miss, can you explain once again?
See, basically, what am I interested in?
Income statement.
I am interested in what goes in the income statement. Are you with me?
Yeah.
My year is ending when? Okay, let's take it in a simpler way. When is my year ending?
30th June.
My year is ending on 30th June 2023. Okay. When is my year ending?
30th June.
2023. So it might be starting when?
May.
1st July 2022.
And July. Yeah.
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 So July, August, September, October, November, December, and then Jan, Feb, March, April, May, and June. Are you with me?
Yes.
Are you with me?
Yes, miss.
Mahad, are you with me?
Yes.
This would be
Yeah.
my full year, and I want to know my charge for the full year. Are you with me?
Yes.
Okay. So for the 12 months up to 31st December 2023, insurance was 7440.
Yeah.
Okay. So that means From 1st December 2022 to 31st of December 2022, insurance was 7,200. Look over here. 1st Jan to 31st of December 2022, insurance was 7,200 for the full year. Are you with me?
Yes.
That means per month it was how much? 600.
7,200 divided.
Yeah.
Yeah.
So up till 31st of December, whatever was my insurance was 600 per month. So 600 into 1, 2, 3, 4, 5, 6. 600 into 6, so it was 3,600 for these 6 months. Yeah.
Okay.
And for the remaining 6 months, the new policy started at 7,400. So 7,400 divided by 12 into 6. So 7,400 divided by 12. So this is how much? 616.6. 7,400 into 6 divided by 12. So this will become 3,700. Are you with me?
Yes.
Please think. I'll give you some time. Mahad.
Yeah.
Till 31st of December 2022, insurance was 7,200 for 12 months. So per month it was 600.
Okay.
And then for the next year, insurance was 7,440.
For the next year.
7,440 for the next year.
Okay.
So when I say it was 7,440, so it was 620 per month. So for the next 6 months, the insurance would be 3,720. So the charge of insurance was changing. And my year starts at the middle and ends at the middle. So first 6 months it was at the rate of 600, and the next 6 months it was at the rate of 620.
Yeah, miss, that's fine. I understood, but how did you know it's 6 months in this year and 6 months in this year?
That is what I started with now. I'm making it for the year ended what?
30th June.
2023. So my year ends on 30th June 2023. So
Yeah.
when does my year start?
1st July 2020. Oh, okay.
Understood?
Yeah, yeah.
So my insurance expense would be, my insurance expense will not be this. It will be how much? It will be 7,220 for the first 6 months. 7,220 divided by 2 into 1. That is half. Plus 7,440 into 6 divided by 12. Yes?
Yeah.
So this comes up to 7,320. So I'm changing it, okay? Are you with me?
Yeah.
Now come on.
Miss, can you explain the last part again?
Nothing, I just wrote it this way.
Oh, okay, okay.
I just wrote it this way, what I did over here.
Yeah,
How
yeah.
did I get 600 per month? It was 7,200 divided by 12 into 6. And this was what? 7,440 divided by 12 into 6. Yeah?
Yes.
Are you sure?
Yeah, yeah.
So insurance was
Yes.
what? 7,200 into 6 by 12 for the first 6 months. And for the next 6 months, it was 7,440 into 6 divided by 12.
For the first year, you will have 3,600.
Sorry?
3,600 in the first year, for
Yeah,
6 months.
3,600 in the first 6 months and 3,720 for the next 6 months.
Okay.
Yeah.
Yeah.
Now tell me, what do you do for accrued expenses?
We add them.
General expenses. So what will you
Yeah.
do?
Add
Are you-
186.
Yeah. Depreciation on motor vehicle at 25%. Reducing balance method. How will you do? Come on, how will you do?
42,000 minus 16,500
Hmm.
times 25%.
This is depreciation.
So,
Yeah.
miss, in reducing balance method, we do the at cost minus the
At the
provision
reduced value. Yeah.
into what?
Into
Into the
25%.
charge. Okay.
Yes. So
Yeah.
depreciation on motor vehicle will come up to 6,375.
Yeah.
Yes.
Yes.
And depreciation on equipment is 20% on costs. Using straight line method. Straight line method is on cost.
So 5,000 times 20%.
5,000 times 20%. So it will come up to how much?
1,000.
1,000.
So, miss, we just do 20% of 5,000.
Yes. Are you with me?
Yes.
Yes, miss.
Okay. No dividend was outstanding. Okay. 1,000 to be transferred to general reserves. Where will this go?
SOSE.
SOCE. So what will I do is I will write transfer to general reserves 1,000. So now I do not need to take any additional information down. Correct?
Yes.
Because everything I've put over here. Now I have to prepare what?
Income statement.
Income statement.
Income statement. Come on, let's start. First I will write revenue 135,040 minus 9240. So this is 125,800. Are you with me?
Yeah.
Yes.
Less expenses. What will I write?
Wages
Wages
and
and 72,000.
Then
motor expenses.
9,820.
then
Insurance.
insurance.
7,000.
So it is 7,200 into 6 by 12 plus 7,440 into 6 by 12. So how much for insurance? 7,320. Are you with me?
Yeah.
Yeah.
Then
General expenses.
how much?
12966.
But you have to show the working, right?
Yeah, 12780 plus 186.
Then
Depreciation.
on motor vehicles. So it would be 42,000 minus 16,500 into 25%. 6,375. And then done.
Yeah.
Yeah, miss.
The total of all expenses is coming up to 109,481. From your revenue, when you're going to subtract your expenses, you will get profit for the year. Are you with me?
Yes.
Income statement is done. Now, SOC. First, we'll write the opening balances. 10,000, 2,000 for general reserves, 13,490 for retained earnings, and the total becomes 25,490. Are you with me?
Yes,
Yes.
miss.
Then I'll have dividend paid. From where is dividend paid? From where is dividend paid?
Ordinary shares.
Dividend is paid from the retained earnings.
Mm.
Okay?
Yeah.
Yeah?
Yes, miss.
Yes.
Then I have transfer to general reserves.
So removed from retained earnings and added to general reserve.
Very good. Nothing in the total. This is done. Then you have profit for the year. $16,319. Where do you write it? Where do you write profit for the year?
Retained earnings
Hmm.
and the total.
Hmm. Then you do total for the row. 10,000, 3,000, 24,009. This becomes 37 and 9. Let me know when you're done. IB Limited has no inventory because it is a service business, so does not buy any product to sell. Tell me why B Limited does not require provisions for doubtful debts.
Miss, what was provision for doubtful debt?
Provision for doubtful debts is a reserve that you create when you think that you keep aside your profits. Aside profits when you think that some of your trade receivables are not going to pay you. So when you think that some of your receivables are not going to pay you, you will keep aside some profits to help you be in a better position if they don't pay you.
So, Miss, for this question, can we write because the customer pay being limited in cash?
Now, if you see, we've made the income statement, right?
Yes.
Did you see any bad debts?
No.
If there were no bad debts, so are there chances of future bad debts?
No, very unlikely.
Very unlikely. So why you don't need a provision for doubtful debts? Because you did not face any bad debts. So you do not see any possibility of a future bad debts. So you do not create provisions. So there were no bad debts. So there were no irrecoverable debts. So the possibility of trade receivables not paying in future is unlikely. So B limited does not require a provision for doubtful debts account. Are you with me? In fact, you see some of the people have also paid money in advance.
Yeah.
Yeah.
So you don't require a provision for bad debts account. Are you with me?
Yes.
Come on. Read the question, Mahat.
The directors of B Limited are also the shareholders. They plan to expand the company. They are considering whether to issue debentures or ordinary shares. Advise the directors whether they should issue debentures or ordinary shares. Justify your answer.
So they want to advise the directors that whether they should issue debentures or whether they should issue ordinary shares. So for issuing debentures, you need to give some points. Or to issue ordinary shares, you have to give some points. 5
Miss,
points.
in by issuing debentures, the
What is
company,
debentures?
it is a loan taken from the public.
It is a loan taken from the public. So for issued debentures, you have to give 3 points, inclusive of advantage and disadvantage. 3 or
Miss, don't we have to give 2 points for each and
yeah.
then justification?
So 3 or 2, and then 1 mark for the advice.
Okay. So for issue of debentures, we could write interest has to be paid.
So if the directors of B Limited issues debentures, so the interest has to be paid
Yeah.
irrespective of profit.
Yes.
What else?
And so I need to write one advantage now, or it- could it be
You've just
both
given
disadvantage?
1 point.
What?
You've just given 1 point.
Yeah.
If you are going to issue debentures, you have to pay the interest irrespective of the profit, and loan is created which ultimately has to be paid. Yeah,
Yes.
it means you also have to pay interest and you also have to pay the money that you've taken from them. But if you issue ordinary shares, what will happen?
It is a permanent source of capital.
It is permanent source of capital. What else?
However, the dividends must be paid to the shareholders.
It is permanent source of capital, may not have to be repaid.
Yeah.
Okay. Dividends can be paid only when you earn profit. Only in event of profit. But if you issue ordinary shares, ownership may be diluted. There will come more owners.
Yeah. So the owners can change.
Yeah. So what do they have to do? The directors should issue ordinary shares because it is less stressful. Yeah.
What?
Should we
How?
issue ordinary shares? Because you don't have to pay a fixed amount of interest. You don't have to even repay the capital. Dividend is only paid when you are earning profits.
Yeah,
Yeah.
yeah.
However, if they don't have problem of cash flow, they can also issue debentures. So whatever option you like, you can give one line for it as a recommendation. So with this, I complete question number 5 of October-November 23, paper 21. Do you have any doubts?